Hello and welcome to the weekly market metrics. I'm your host Sandeep and we are in week 9 of 2026, and with that 2 months of this year come to an end. Time does fly. Talking about the markets, the less we speak, the better. While we're close to 4% down from all time highs, more than that, this market looks like one of those sell the rise kind of regimes, specifically if you are a trader. Beyond that, on the precious metals front, those are holding up well as expected, but nothing much beyond that. Anyways, let's check the charts and see how the price action played out this week and this month. We'll also look at what's possible in the coming week. As always, let's start with Nifty. Nifty monthly chart first. For the month of Feb, Nifty tested the low made in October 2025 on the 1st of Feb, the budget day, and almost touched its all-time high following the India-US trade deal news on 3rd of Feb. After a whopping 6.7% range or 1,770 points, Nifty closed down 0.56% or 142 points compared to the last month's close. After April 2025, again thanks to Trump for the tariff bomb, this was the highest monthly range. Looking at the Feb chart on a monthly time frame reminds me of this old Mumbaiya saying which says, "Khaya piya kuch nahi, glass thoda bara aana." That's exactly what happened. I don't know if there are equivalents of that in other languages, but that's what I felt when I saw the chart. Now, if you have to look at the outlook based on the monthly chart, well, it remains sideways to bearish, with the budget day low of 24,570 acting as support, and resistance is placed at the all-time high of 26,375. Now over to the Nifty monthly seasonality chart. As we just saw on the monthly chart, Feb 2026 closed in red. Going into March, we have historically seen positive returns every year from 2021 to 2025. March 2020, of course, brings back those ominous COVID memories when the index dropped over 20%. But that phase is well behind us. Let me know in the comments, what do you think? Will March end in green or it would end in red this year? Talking about YTD numbers, 2026 so far is still in red at minus 3.64%. Moving on to the weekly time frame, just like last week, Nifty failed to breach the previous week's high, but it did break the previous week's low. For the week, Nifty lost 939 points or 1.54% to close at 25,179. The weekly range expanded to 630 points, the highest in the past 3 weeks. Resistance remains in the 25,900 to 26,000 zone. Support is unchanged at 24,700 followed by 24,400. The bias for the next week remains negative to sideways unless we see a decisive weekly close above 26,000. Moving on to the daily time frame, we saw two -1% days on Tuesday and Friday. The other 3 sessions printed green candles. Monday looked promising with a gap up and then the high of 25,770, but Tuesday's candle broke last week's low and that level was taken out again on Friday. Remember the 3rd Feb gap I had mentioned? It now looks close to getting filled. Just 33 points remain between Friday's low and the 2nd Feb's high. That high at 25,108 is the next support, followed by 24,800. Resistances are placed at 25,650, 25,900 and 26,000. Overall, the price action suggests a downtrending to sideways week ahead. On to the 1-hour time frame, Nifty traded below the 50 EMA for most of the week after Tuesday. Shorts worked well except for some choppiness around the EMA on Wednesday. Feb was one of the toughest months for short-term trend followers. I'm really hoping conditions improve going into March and then further in the new financial year 26-27. Moving on to Nifty's expected range till the upcoming expiry on 2nd of March. Now, Monday is a trading day, and as Tuesday is a holiday, the expiry has shifted to Monday. Now, Nifty's 0DT ATM straddle closed at 203. Last week, the 2DT premium ahead of the monthly expiry closed at 238. I would say that's a healthy premium going into the first weekly expiry of March, especially with a weekend ahead. The ATM straddle premium is now pricing in a 0.8% move on either side. Based on the current straddle pricing, the expected range till expiry on the upside is 25,382 and on the downside is 24,976. That roughly gives us a 25,400 to 25,000 range for the expiry. Now, talking about the Nifty weekly expiry open interest, we see rising open interest at 25,300, 25,400 and 25,500 C strikes. On the PE side, only the 25,000 strike has noticeable open interest. This clearly suggests that the street is positioned for a bearish move on Monday. Whether that actually plays out, we'll have to wait and watch. As I've always seen, OI can flip within minutes, so nothing definitive can be concluded from this alone. My takeaway is 25,000 as support and 25,500 as resistance. But Monday's 0DT price action will ultimately determine the actual support and resistance levels. Now over to SENSEX. On a monthly time frame, it looks similar to Nifty with 86,000 acting as resistance on the upside and 8,200 and 80,000 as support on the downside. SENSEX also made a range of close to 7% or nearly 6,000 points and closed at 81,287, which is 983 points or 1.19% lower than the previous month's close. If you look at the weekly time frame, SENSEX lost 1,528 points or 1.28% to close at 81,287. It formed a strong red candle with a long upper wick and closed near the week's low. The weekly range was 2,327 points or close to 2.8%. Support is placed at 80,400 followed by 80,000. On the upside, key resistances stand at 84,500 and then at 86,000. Now, if you look at it on a daily time frame, SENSEX filled the 3rd Feb gap and closed at 81,287. Support lies at 80,555 followed by 80,000. Resistance is placed at 83,500, 84,000 and 84,500. Talking about the SENSEX range till the coming expiry, well, the next SENSEX weekly expiry is on 5th Feb, Thursday. The ATM straddle closed at 1,046 points, which implies a 1.29% move on either side. The premium is similar to that of last week. This implies an expiry range on the upside of about 82,333 and on the downside 80,241. which broadly places SENSEX in the range of 8250 to 82,350 range going into the expiry. Moving on to Bank Nifty, if we look at the Bank Nifty monthly seasonality chart, for Feb 2026, Bank Nifty gained 1.54% to close at 6526, marking the highest monthly close for the index. Contrary to Nifty, Bank Nifty has been positive in both months of 2026 so far. So while the broader market is zigzagging, Bank Nifty is holding up relatively strong. Talking about Bank Nifty on a daily time frame, support lies at 60,000 followed by 58,700, while resistance is placed at 61,400 and 61,800. Except for Friday, Bank Nifty did not see any minus 1% candles this week. The range for the week was 1,079 points or 1.75%. Now on the hourly time frame, Bank Nifty chopped around the 50 MA and broke below it on Friday. However, given its relatively higher strength compared to other indexes, Bank Nifty should recover faster than the rest. That said, short-term trend following on Bank Nifty hasn't been great either in 2026. I really hope that changes going forward, fingers crossed. Moving to rate of change, in week 9 of 2026, it was red across indexes with mid-cap Nifty just about holding on at plus 0.11%. Nifty, BANKNIFTY and SENSEX lost 1.54%, 1.05% and 1.84% respectively. Year to date, all indexes continue to remain negative except BANKNIFTY, which is up 1.59%. Jan and Feb historically have been negative, and that pattern seems to have repeated this year as well. Looking at the current price action, the tide is unlikely to turn anytime soon. Now, talking about sectors this week, pharma, metal and auto were the new entrants in the top 5 sectors with gains of 2.23%, 2.09% and 1.12% respectively. PSU Bank and Energy continue their run from the last week. In fact, PSU Bank has featured in the top 5 sectors for 3 weeks in a row. So it's the PSU banks lifting the Bank Nifty index, not the private banks. On a different note, I think I should start tracking the top negative sectors as well from next week onwards. I'm sure IT will be top in that list. Now, talking about the range and expiries, Nifty's 5-day average daily range has dropped from 296 points last week to 242 points this week. That said, this week did see 2 300+ point range days on Tuesday and Friday. All Fridays over the past 3 weeks have seen large moves and wide ranges. There seems to be something special about Fridays. I'm just kidding, maybe it's just my recency bias creeping in. Now let's talk about Nifty's Feb monthly expiry on 24th Feb, Tuesday. After an 80-point gap down opening on expiry, Nifty continued to drop without any meaningful pullbacks, except for one post 1:30 p.m. of around 130 points. The straddle opened at 135 points and did not see many spikes during the day. I'm sure directional option sellers must have benefited from this price action, and so did some option buyers. For the day, Nifty dropped 288 points or 1.12%. Now, Sensex monthly expiry was on 26 Feb Thursday, and it saw wild moves on both sides, with the at-the-money straddle opening at just 360 points. Sensex moved close to 600 points in the first 3 hours with sharp swings in between, and after 1 p.m. it rallied close to 442 points. It was clearly a tough day for option writers, and I believe even for option buyers, as the swings were too wild to comfortably hold on to M2M gains. Now, talking about India VIX for the week, it moved 4.6% down to close at 13.7, but 0DT Nifty straddle premiums are still about 200. I would like to believe that's because of the weekend in between, but I don't see anything much to read there. Talking about commodities this week, well, the commodities seem to be holding up and moving in sync with expectations. Precious metals and copper are all in green. Silver topped the charts with a gain of 6.75%. Next was gold at 2.97%, and then we had copper at 2.36%. On the energy side, crude oil was up 1.8% and natural gas was down minus 4.67% for the week. Like I had shared this comparison last week, do note compared to Nifty 50, which is down close to 4% for the year, gold is up 14%. Will gold continue to rally in 2026? Well, let's wait and watch. In summary, week 9 was broadly negative for equities. Nifty fell 1.54%, Sensex dropped 1.84% and Bank Nifty declined around 1%, while mid-cap Nifty barely held in the green. Year to date, only Bank Nifty remains positive, showing clear relative strength. Price action stayed choppy across timeframes with strong red weekly candles and weak follow-through on the rebounds, making short-term trend following extremely difficult. Sectorally speaking, PSU banks continue to lead, supporting Bank Nifty, while pharma and metals saw some strength. Commodities were mixed, with gold and silver standing firm and natural gas correcting. Overall, I would say the structure remains sideways to weak, with selective strength in banking and defenses and precious metals. Moving on to what caught my attention this week, I have 2 interesting reads for you. The first one is a blog post by veteran market analyst Nuresh Mirani, where he talks about the sectoral skew across NSE market cap indexes. If that kind of analysis interests you, you must have a look at the post. Next is this deep dive by Rhodium Group, which is a think tank of sorts based in New York. It's about why Chinese EVs are so cheap. In fact, if you look at countries like Thailand and Brazil, which have relatively low barriers to entry for imports, you will see that Chinese auto companies like BYD and GWM are the preferred cars over there. Great read again if you are interested in the EV space. As always, links are in the show notes. Now over to what to expect in the coming week. Well, next week is a 4-day trading week, with Tuesday being a holiday on account of Holi, and it also marks the first week of March 2026. There are no major known events lined up for the week ahead. With that, we wrap up this week's weekly market metrics, wishing you a very happy Holi in advance. And if you find the series useful, don't forget to subscribe to the channel. Until then, stay curious, stay steady, and enjoy your weekend.